Hello, everyone, and welcome to this new episode of the Blueprints podcast. Today, I'm thrilled to be joined by Sam McPherson, co-founder and CEO of Phoenix Labs, the co-contributors to the Spark protocol.
I do not want to see a world where the US dollar collapses. With all the problems with fiat currency, I think that is a far worse world where the US is not the global hegemony. Stablecoins are the ones that are here and they've proven themselves. So this is the product market fit for crypto. We should step on the gas with stablecoins as much as possible if we want to merge the traditional finance and DeFi sort of spaces. And stablecoins to me are the black hole that is doing this. I firmly believe that everything will be tokenized eventually. US dollar stablecoins in particular are the main driving force right now. But will equities come on chain? Absolutely.
If you were not working in crypto, which industry would you be in?
I'm not going anywhere. I love crypto, so I'm here to stay.
Sam, thanks for coming on the podcast. How are you doing today?
I'm doing great. Thanks for having me.
I want to let you introduce yourself and explain me briefly what Spark is.
Yeah, sure. So I'm Sam McPherson. I'm co-founder CEO of Phoenix Labs, and we're building the Spark protocol. Spark is a commercial lending business within the Sky ecosystem. Spark will do lending into DeFi opportunities, CeFi opportunities, and TradFi opportunities, and really managing the USDS balance sheet and optimizing for the best possible risk-adjusted yield.
Amazing. Let's start by some rapid fire questions. What aspect of the industry frustrates you the most?
Some of the metrics that the industry optimizes for are more like sort of like vanity metrics, and like I really would like more of a focus on like a core business and like sustainable business. That's really what we're focused on at Spark. Is not necessarily getting the most amount of TVL or whatever, but instead like focusing on what's going to provide long-term business value. And then to me, that's the same as it's always been. It's, a revenue generating business is sort of what you need to focus on. So yeah, people kind of optimizing for, marketing the token as opposed to the actual core business.
Absolutely. What's the most surprising use case you've seen for stablecoins so far?
Yeah, I think that's just because I've been in this space so long. Stablecoins are quite are a little bit boring to me now, just being involved with them so much. Like really, stablecoins are just like a tokenization of any dollar yield product. So what I find interesting is still just the tokenization itself. So this is like a huge unlock. Um, you know, it allows people to get more ability to use their capital more efficiently. So to me, like the end state of like stable coins is that people aren't really transacting in, the US dollar anymore. It's more of like something that looks more like a money market fund or something more for exchange so that you're always receiving the risk-free rate at the very least for holding something like US dollars. So I still am it's just the tokenization itself. It's kind of been around for a while, but that is something that's quite, I still find quite interesting, quite useful in society.
If you had to work on a crypto infrastructure project, which team would you be joining?
I don't think I'm super into like infra stuff. I don't know if this counts, but maybe like decentralized identity, like more building out the infrastructure for that could maybe count. But I'm very much like in the application layer, my mindset. Yeah, I guess that's probably the best answer I can give.
Maybe proving
Potentially, but I'm
infrastructure.
like, I did go to university back in the day, and I realized pretty early on I'm not a researcher in my heart, so I don't know if I could do it. I think there's people much better suited to that kind of stuff.
If you were not working in crypto, which industry would you be in?
So I mean, fun fact, I used to be in video games actually before I joined crypto in like 2021. So I don't know. I don't think I would go back to that. I really like pushing the forefront, and that's what drew me to crypto in the first place. So I think maybe AI is something potentially, but I'm not going anywhere. I love crypto, so I'm here to stay.
What's the biggest L you've taken on chain?
I mean, in terms of opportunity costs, countless fortunes for sure. Direct losses. I think I made some pretty big, like relatively speaking, losses early on when I came into the space messing around with like MEV stuff. Taking a stablecoin, large, high leverage stablecoin, long and short positions. So, yeah, there was a few times I made a smart contract error when I first started programming smart contracts. They cost me a fair bit. So yeah, and then I sold Link pretty early on, so that was probably a big mistake.
Yeah, well, an opportunity cost, I guess.
Yeah.
Yeah, no, for sure, for sure. Like, yeah, it's always hard to time like tops and bottoms. But definitely like smart contract testing with funds that can sting. I guess. I maybe it was the early days, I guess.
hmm
Yeah, talking about the early days, let's jump into some longer form questions. I would love if you could tell us a bit more about your background. What drew you to crypto? Like, as I guess someone like lurking in from the trenches, but also like wanting to build a protocol. And I guess like why did you get involved specifically in MakerDAO, which then becomes Sky and then built Spark?
Yeah, so I mean, way back in the day, I was aware about Bitcoin, like early 2010s kind of time frame, but Bitcoin in itself never really interested me. When I sort of started, I just randomly picked up crypto in 2017 time frame. I mean, it's corresponding with the bull market of the time. Ethereum was I discovered that, and I was very interested in the smart contract development side. I really like the idea of me. I'm a programmer. I've been doing software engineering for like 20 plus years now. And so being able to write smart contracts like code for finance and stuff like that really drew me in. And so I think like a lot of people in the 2017 ICO cycle, hunting around for things that kind of made sense beyond Ethereum and Bitcoin. And so I was looking at a number of projects, and believe me, I invested in some some shit coins for sure. But like Maker was the one that was like, okay, this makes sense to me. I'm a very like fundamentals investor for the most part, and so I like that there was like a business, there was cash flows, this kind of stuff. So yeah, I bought some Maker in 2017, I think it was. I bought it then, or maybe 2018. It's actually early 2018, and started just hobbyist investing, lurking in the forums, learning about more about the protocol. I think I watched like all the videos they had out there, and then by late 2020 I started getting more actively involved in the protocol, participating in governance. I actually started building smart contracts around then too. Then was hired on by the newly formed core units that were, this was when the DAO was spinning off from the foundation, so I joined in the core engineering team at that point, and then was involved in, we did the MakerDAO, like the DAO was like running the show for real between 2021 and like 2022. And yeah, was there in the core engineering team for all that, and then yeah, really just like interested in like building out products, stuff like that. So the idea for Spark formed around I believe it was mid 2022. Yeah, I think when the restructuring was happening with the end game into the what we see now, which is the Sky and subDAOs type model. And so or I originally thought of Spark as sort of like just filling in some missing gaps in the products that were being offered by Maker. Like Maker had the over collateralized, isolated vaults in the core vaults, the CDPs. But modern lending markets had emerged in like 2021 and beyond, like such as like Compound and Aave. And so we wanted features like cross collateralization, rehypothecation of the collateral, stuff like this. And so we wanted to launch an internal lending market. So that was the original point of Spark, is to have this new lending market attached. But it's grown into so much more. And I think we can run over this in more detail on this pod.
Absolutely. Yeah, I mean, you're definitely like an OG, like in the DeFi space, and I guess more specifically, like in the stablecoin space. I would love to have like your impression on like the how how much this space has evolved. Like stablecoin used to be like the boring part of crypto. I remember like it like when Tether came out. Like I guess the only exciting part about Tether was like I guess like the Tether truthers that were always like preaching its demise, but it's now become probably one of the most exciting, if not like the most exciting parts about crypto. Like you see, we've seen the Circle IPO. We've seen like the numbers of on revenue on Tether. It's just absolutely crazy to see something like that. Like, how do you perceive this evolution of the stablecoin space?
Yeah, I think so. Crypto promises a great many things, and I still do believe there's going to be other fundamental use cases. But stablecoins are the ones that are here, and they've proven themselves. So this is the product market fit for crypto, and so I'm very much like we should step on the gas with stablecoins as much as possible if we want to, merge the traditional finance and DeFi sort of spaces. And stablecoins to me are the black hole that is doing this, and it's dragging all of the TradFi RWAs on chain as well. So having access to the U.S. dollar for countries, emerging countries, it's used for exchange settlement as well. Say better access to savings, really just sort of everybody like the US dollar is the world reserve currency. And for a lot of people, having this over their hyperinflating country fiat currencies is just a huge improvement. And so this is why we see this huge adoption. And the next phases are starting. We're starting to reach that now. I think tokenized treasury bills were popular coming on chain 2023, precisely because of the high interest rates. To curb the outflows out of crypto. And so I think you'll see this more, especially with like dollar denominated TradFi instruments. So we're now seeing like private credit come on chain. The dollar stuff is a lot easier. Dollar debt instruments to get on chain. That's going to be the first step, but it's gonna snowball. And this is just like we need this sort of catalyst where all the assets we reach this like inflection point where enough of the assets are starting to come on chain that we'll start seeing, equities and stuff like that coming on chain as well. So really the stable coins are like the black hole that is dragging traditional finance on chain. And we see this with all these fintechs now starting to get involved. And really, I mean, it's been like what? DeFi is like 5 years old. It's not been around that long. And honestly, I feel like a lifetime has gone by since 5 years ago when we were just, I think it was just like, I mean, it was just Uniswap. And I think like Maker multi collateral DAI had just launched in November of 2019. Uniswap was around, Compound was around. But yeah, DeFi was like really, really clanky. And then, yeah, since then, now we've entered the halls of Congress and all these types of things. And so it's been quite a surreal shift in a very short amount of time.
For sure. Yeah, want to go a bit deeper into like how the Spark protocol actually works. Spark is often defined as an on-chain capital allocator. I'm wondering if you can kind of explain how it works like practically. What is the type of what is the part of Spark that is like portrayed as the capital allocator, and what's the capital allocation process? How often the decisions are made, and how many like platforms, like how many different avenues can you park this capital in at the moment?
Yeah. So before I get in that, I'm going to run over briefly the history. As we stopped before, I mentioned the lending market that was the launch of Spark, was the lending market with all these features. So that product is called Sparkland. And since then, there's been evolution towards the newest product, which is called the Spark liquidity layer, which does the allocation that you were talking about. But so in the 2+ years that Spark has been operating, there's now three main products. So Sparkland was the first one that was launched, the DeFi lending money market. The second product that was launched is Spark Savings, which is the earn side. So people can deposit. This is the people who are depositing into what effectively goes into the Spark liquidity layer. So you deposit USDC or USDS, and soon this will be expanded to Tether and other stable coins, and you earn a yield on top of that. And where does that yield come from? It comes from the Spark liquidity layer's yield generation strategy. And the general idea is that the Spark liquidity layer will rebalance between all large scale opportunities across DeFi, CeFi, and TradFi. So whether it's like RWAs or the basis trade in centralized exchanges or in DeFi lending markets. This is the general idea, but in practice, where is the yield coming from right now? It's primarily split between four places as of right now. So first and foremost, Sparkland continues to be the biggest venue for revenue generation for the Spark liquidity layer. The lending market, that's over about 1.2 billion, I think, deployed into there as of right now. Then next up is there's allocation into Athena. This is capturing the funding rate on centralized exchanges. So Spark liquidity layer is able to deploy into that, and then effectively the funds are supporting the perpetual futures in exchanges such as like Binance and Bybit, et cetera, et cetera. And next up, this is a newer one that was added, which is the Coinbase integration. So on Base, on using the Morpho lending market, Spark is deployed USDC and is actually 75% of the capital supplied to the market on there that's collateralized by CBBTC, which on the other side is hooked into the Coinbase app so that people can take out loans against their Bitcoin. So maybe not a lot of people know this, but yeah, Spark is the main capital allocator into that market, and that market produces quite a good yield. This is the thing I find exciting about this integration is this like new markets that weren't previously accessible within the Maker ecosystem. Maker was previously constrained to just doing like over collateralized crypto lending. So now we have all these new venues. And then the final one is again, it's usually surrounding Bitcoin is kind of the big way that the new loans are being issued. This is through Maple. So Spark deploys into Syrup USDC, and this goes out to OTC Bitcoin loans primarily. So these are institutions who maybe don't feel comfortable coming on chain for whatever reason. There's all kinds of reasons why this is the case. And so Spark is able to cater to this market as well. And so with these four, this is the bulk of the yield that's coming in right now. But I think the broader point is that the Spark liquidity layer is adaptable. So whatever yield may become big in the future, like the Spark liquidity layer is in the best possible place to deploy large scale capital in a quick way and capture this yield.
And I guess like my follow-up question is like what are in your opinion like how the split is organized between like these four main avenues, and how are allocations managed in general, and how is risk managed? Yeah, like I guess the question in my mind is also like how do you like balance the I guess the incentive to always go with the avenue with the highest rewards, like while still managing risk? Like what is acceptable risk for the Spark protocol?
Yeah, so we are optimizing for risk first and foremost. Like, so ultimately, depositors into savings, we want this to be a good yield, but a relatively safe yield. So the bulk of the balance sheet is still in either stable coins. So this would be like USDC, or tokenized treasury bill products, or over collateralized crypto lending. So some of the newer, so that covers pretty much everything I said except for Athena and Maple. So those are newer integrations. Those are relatively smaller portions of the balance sheet because there's like, there are additional risks with going to these types of venues, such as, there's counterparty risk and stuff like that. So our preference, or Spark's preference, first and foremost, is over collateralized on-chain crypto lending. If we can get that, that's ideal. So the rates there can be somewhat lower because they are lower from a risk-adjusted perspective. But all yields are relative, and there's usually we're like as long as things are not a scam, there's always going to be a price point that's attractive for deploying into things. So that is just goes into the risk framework that is part of this is defined by Sky, and maybe we can get more into the details there. But Spark is also making judgment calls here a bit about what the hurdle rate is for Spark to deploy capital into something. For decision making with liquid money markets, this is pretty straightforward because we just look at the collateral, and it's usually a mix of CBBTC is primarily what we accept on the Bitcoin side for Ethereum chains, or like ETH, or various LSTs, LRTs. This is the bulk of the collateral that we're looking at. So within those, it's mostly just whoever's like whatever money market is paying that amount. So whether it's Sparkland, Aave, Morpho, it doesn't really matter. We're mostly like the smart contract risk all these protocols are quite lindy. So it's a fairly negligible smart contract risk. And then all your differentiating is based on the collateral. And all these lending markets host the same collateral. So then it just comes down to where's the yield the most. And so the Spark liquidity layer will automatically, even like on the next block, if somebody borrows a whole bunch on Aave, it will just deploy capital into there immediately. Similarly with Morpho or Sparkland.
You previously mentioned Sky. Can you remind the audience like the relationship between Sky and Spark? Spark is one of Sky's stars. Can you tell us like what that means exactly? And maybe also like chime in on like the rebrand and reorganization that happened over at Sky uh, the past years.
Yeah. Um, so quickly on the rebrand, I guess the big thing in that for me was getting the USD in the stablecoin name. I think DAI, I think it's dear to a lot of DeFi OGs' hearts, but having this extra layer of confusion about what is DAI, is it a volatile crypto and stuff like that? Whereas like USDS, it's like it's very clear. It's a stablecoin. It tracks the US dollar. Like that just reduces the confusion for like the next 10, 100x in growth that we're preparing to go after. So that part of the rebrand I think was absolutely needed. Now with regards to the relation of Sky and Spark, so you can think of it, and I'm not saying these things are exactly that, but I think it's a useful analogy in that Sky more operates like a currency issuer, central bank, and that it's completely unopinionated about like the directions of growth and opportunity that should be pursued. Instead, it just sets the rules for everybody, the sandbox to play in, basically. So, Sky has a very comprehensive risk framework that will sort of have general rules about this type of collateral is more risky than this one, and the stars subDAOs. There's multiple of them, and so these subDAOs all compete to allocate the balance sheet of Sky. And so Spark is the first, but there's also been recently announced another RWA focused subDAO called Grove. And so the idea here is that for basic things like treasury bills, these are assumed to be like, I mean, they're not, there's details here, but Sky treats them as basically risk free collateral. So you want to allocate into something like treasury bills, you can do that as much as you want. But if you want to allocate into something riskier, I think, well, private corporate debt, I think is an interesting sort of next level up in the RWA space. You can allocate to that, but you need to post junior capital as the star, as first loss capital, basically. So if there is some loss event, the star is on the hook first and foremost. So this means that those who are the operators of the star they have skin in the game. So any decision, you're not allocating other people's money. You are to a certain degree, but it's like it's more like you are very concerned about sort of the risk profile of this. And in this sense, the star's incentives are quite aligned with the risk management of the protocol as a whole. And so in this sense, you kind of get the best of both worlds, where you get the whole structure is decentralized as a whole, because Sky is very hands off and there's not like any sort of active decision making other than just enforcing the rules. And each of the stars compete in a free market to allocate the balance sheet to whatever they think is the best opportunity at the time. And so they're all competing to generate the best risk adjusted yield for Sky. And so, some of them will fail, some of them will succeed. And so you get this like the ability to adapt with the agility of a centralized company, but still maintaining decentralization of governance as a whole with the system through the free market. So yeah, it's quite an interesting setup. It's definitely unique. I don't think anybody's actually tried this. I think a lot of DAOs are kind of just you know not really taking it seriously, actually doing scalable governance. And so I think will this be successful? I don't know, but I think I still want to. I'm still very interested in doing experiments with governance in particular, because I don't think this has been solved, and I think this is something that blockchains and crypto can actually solve in addition to just doing transparent finance.
It's definitely like super interesting to see this play out. Like as you said, like it's a unique setup, and it's a beautiful like setup because it's very aligned with like the core like crypto ethos. Now I'm curious to know like your opinion on like the risk of a star like outgrowing a sky. Like what is like what how do you think like the core ecosystem can defend itself or not against like one of the subDAOs like outgrowing itself and essentially like the core ecosystem like losing attractiveness.
I think the relation you can kind of think of similar to like a state versus like federal government type structure, where the stars are more like the states in that some of them can become quite economically valuable, be quite important. But ultimately, the authority rests with the like federal government, or Sky in this case. And so in smart contract land, this is administrative control. So the system, if you opt into it, there are certain like rules you have to agree to. And so one of those is that admin authority ultimately has to flow through Sky token holders. And so Spark token holders can make like proposals and off-chain sort of recommendations for what to do. But ultimately, Sky has to stamp that and be like, this follows the risk framework. This is correct. So this system probably isn't going to be perfect off the start. There's always a bit of give and take between like states and federal government and stuff like that. I think we'll have a similar sort of trade-offs between like all of the similar sort of mechanisms about like, freedom and taxation and stuff like that. And so if something's not quite working, it can be tweaked a bit. But the general idea is that you want to, as much as possible, cater towards a free market capitalism and sort of a competitive free market. And so this is the goal, but yeah, things need to be kept in check because you're right. And if sort of the stars were like completely unconstrained by Sky, then yes, it's possible they could like overtake Sky. But this is not the case, precisely because of I think in our analogy of the country, there's the army is like the federal government owns the army in sort of the extreme case, and Sky has administrative authority over everything in the extreme case as well. So that is the ultimate check on everything.
Yeah, interesting. We have seen instances of nations being overtaken by a rogue army that kind of outgrew the nation state in a while. But
I'm
um,
not sure what that would be in this analogy though, because smart contracts are pretty hard to usurp like that. So I don't know.
to kind of finish on I guess like the Sky and Spark piece, what is I guess like your long term vision of on how USDS can like gain market share or maintain its market share, particularly around like other stablecoins. We're seeing like so many new stablecoins pop off. We're seeing new stablecoin chains. What do you think is going to be like the core thing that needs to be focused on for USDS to maintain its market size.
Yeah, so I want to differentiate between like two different types of stable coins in my book. There is the fiat backed full reserve stable coins that are like Tether, USDC. So these are more acting as like payment, exchange settlement access to US dollars in emerging markets, this kind of stuff. Where USDS sits is more on like the savings side. So it's that particular niche. It's for those who who have the USDC or USDT, but want access to the yields in DeFi or the funding rates and stuff like that, and sort of providing this highly liquid, relatively safe yield on top of whatever dollars you may be holding. And so, like, additionally, beyond USDC, USDT, you have like PayPal USD, Ripple USD. These are all like similar in that bucket. USDS, and in particular, I would say Spark Savings, which is related to USDS and SUSDS, but it's more just a yield on top of these various versions of dollars on chain. Um, the key competitive advantage is that it's still like the largest in the space, and so having access to the most amount of stablecoin liquidity means that sort of you can operate at a like and support the liquidity of these stablecoins cross chain. So USDS is still in a pretty unique position here. I think prime example of this is let's look at the Coinbase Bitcoin Borrow product, right? If Spark was not injecting capital into there automatically, USDC even, so it's not USDS, it's USDC. That market would not have been able to grow as fast as it could have otherwise, because relying on like third party capital, LPs and stuff like that is proven to be like very janky. And this is what people are complaining about with the Ethereum L2. This is what liquidity fragmentation looks like. So Spark is able to smooth over this liquidity fragmentation. And it's precisely because of the size. There's over 8 billion in total deposits into USDS. And so we're able to capitalize on that and like support markets such as the Coinbase Bitcoin Borrow, but really anything stablecoin liquidity for all of these different types of stablecoins. They're gonna all ultimately flow through Spark. So we view ourselves as like the binding scaled liquidity layer of all of DeFi, really.
But that liquidity layer may be extremely product market fit in the sense that like it can serve like as that liquidity layer for DeFi and like serve amazing things, but it doesn't necessarily like mean that the liquidity layer will always go and find the path towards like the best yield. And there could be like other yield bearing stable coins that really like only focus on the yield of the users.
Yeah, and for those, I would again like to split this out into like two kind of scale buckets. So in terms of like sub 100 million stable coins that are like delivering 15% APY, we can't compete there. We're not looking to compete there. That market is like very much jumping between farms, and like you as a operator of a smaller stable coin can move around much quicker. There's a lot of competition there. We're not interested in that. What we're interested in is like sort of the high scale yield. And once you get up to billions in size, there's actually not that much that can support that. So it's like DeFi lending is like one that's like pretty big. But then like exchanges are really OTC lending is like another where institutions are borrowing from you off chain. So it's similar to the on chain lending, but it's OTC and off chain. But beyond that, like you really, the sources of yield at a scale at this sort of scale are through like exchanges and fintechs and stuff like that. So the Coinbase Bitcoin Borrow product, we're expecting to see much more of that, as well as perpetual futures on the exchanges via products like Athena. So this is the realm that Spark is competing in, and it's like there's just not that many like token incentives don't really get you that far as a yield source in this sort of scale. So we're really hunting for these sort of larger scale opportunities, and there definitely are more. I think Bitcoin borrowing in particular is something that we've only just started to tap into. I think there's a lot more growth in the OTC lending, but in addition, we see like some of these like Bitcoin L2s coming out as well. So, OG Bitcoin people, like a lot of them like don't want to be wrapping their Bitcoin on Ethereum for, obvious reasons. So it's important to be meeting people where they are. And if they're more comfortable on a Bitcoin L2, then, we want to meet them there.
I want to talk about the SPK token, which launched earlier this summer. I'm very interesting to understand like what drove you to specifically launch a token. What is the utility that the token serves within the broader protocol? And if you had any advices for founder preparing for a TGE, I know it's something that can be very stressful, and I'm guessing that most founders would find it very interesting to have like your perspective since your TG was pretty successful. So yeah.
Yeah, so for token utility, there's two things you can do with the token. One is participate in governance. So that's just being started up very soon. There'll be some votes on Snapshot for the direction of Spark and all that. So gradual decentralization is sort of what like this sort of standard approach where just going to continue to hand things off more and more to the DAO as Spark DAO takes over. So governance rights is one of the big ones for SPK token holders. The other thing is there's staking. So we do staking through Symbiotic and so the plan there is to use the economic value of the token to secure the protocol. So this will be things like oracles, bridging, can all have this additional economic security applied to them through staking through Symbiotic, which is quite good. Um, yeah. So for advice for TG, I mean, I don't know. I'm very much a product person, so the token launch was this is not the most enjoyable thing in the world, but I'm glad it's over with. Once it's like I guess to other people who haven't launched yet, it is a lot of work. Um, but once it's done, it's done. It's over with. You can kind of shift the team's focus back entirely to product oriented stuff, which is great. So um yeah, I'm glad the token's done. I'm glad it's out there. I'm glad people can participate, but I'm also glad to be moving back to product focus.
Amazing. I'd love to dive into quickly like I guess the broader like stablecoin and DeFi picture. There's been a significant push towards like RWAs recently. Could you discuss like your view on the role of these assets in crypto's future and like the potential competition with stablecoins? Because at the end of the day, like the mother of all RWAs are stablecoin protocols.
Yeah, I think RWAs like US dollar instruments are gonna it's all ultimately I think just gonna be backing for stablecoins. So stablecoins are like the user level interface for um access to the US dollar. And I think most people are, a lot of people are just happy to get access to the US dollar as the first stage. There's going to be this continuing push for yield, at least the risk-free rate. And to me, this is sort of like what the ethos of crypto is all about is like giving access to people who don't normally have access. Because I believe that the fiat currency system as it is now, where high interest rates are, they're effectively a taxation on poor people who don't have access to money market funds. And so, what stablecoins enable first and foremost is the removal of these barriers, such that governments, banks can't take advantage of the people with less access in society. And so, it's going to become pretty standard to have your cash be earning the risk-free rate at least at all times. And I think even beyond the risk-free rate, doing over-collateralized crypto lending has proven itself to be quite safe. Like we do lending in another number of venues, and over-collateralized crypto lending, especially against liquid assets like ETH and Bitcoin, LSTs, LRTs, like there's actually been no bad debt in major protocols with these highly liquid assets at like the sort of the maker and Aave levels of LTVs and stuff like that. So that I think this source of yield is quite good, and it's proven itself to be quite safe. And so this is a venue where I think people will gravitate more towards something like Spark Savings, which offers this a bit better yield over like the risk-free rate, sometimes quite good in bull markets. And so, but still like relatively safe yield. And so this demand for, you know, US dollar, and then yield on that US dollar is just going to accelerate, I think. And then what's backing that is RWAs. And so the RWAs right now, it's mostly just treasury bills. But as I said, we have private credit starting to come on chain now. I expect that to continue to accelerate. And the stable coins are sort of like what the investment package looks like. So it's really any sort of like dollar yield product will be a stable coin. And then people can just, there's going to be a huge market of different options and people can choose their risk profile. And I mean, the other thing that like DeFi really brings here is transparency. So a lot of the structural issues that happened during the global financial crisis of 2008 was due to opaqueness of these complex structures, derivatives. And so what crypto provides is transparency first and foremost. So at Spark, we have a dashboard called data.spark.fi where you can view every last little dollar. I mean, if it's not quite there yet, the goal is to have every single dollar that you put into the savings product. You can see on the asset side where exactly those dollars are going into as much as visibility as possible, down to like hard assets, even potentially off chain. So this sort of radical transparency, I think, I'm a big believer in like giving people user choice and empowering people to make their own decisions. And so by providing people with all the information, I believe that the market as a whole will make healthier decisions, and we will can reduce the amount of systematic risk that can come about from like opaque systems.
Yeah, so I guess my question was a bit more also around tokenization, and I guess the future competition for like real assets coming on chain to be tokenized. Some maybe like equity, maybe a gold stable coin, or like fundamentally like maybe just like wrap Bitcoin on Ethereum. Why am I asking all of that? Is also because I mean most people got into crypto because like they believed in the digital gold thesis, and they believed that there was like a problem with fiat currencies. Do you see like a future where like the stable coin that we know today like stops being just the US dollar and starts to be maybe a mixed bag of like hard assets, or maybe it can involve like other like tokenized products?
Yeah, okay, so I misunderstood. You're talking about stablecoin in the broad sense. So I guess that's like really any RWA can be a stablecoin, I guess. Yeah, so I think we have the product market fit right now for the US dollar coming on chain for the reasons that I mentioned, but I believe we're going to hit this inflection point. It looks like it's actually might be coming sooner than I would have originally thought, especially with the US kind of becoming more friendly with crypto, which is great. I firmly believe that everything will be tokenized eventually, and it's just a matter of when and sort of what the forces are driving this. And so US dollar stablecoins in particular are the main driving force right now. But will equities come on chain? Absolutely. I don't, but it's gonna take a while. So like it's less clear to me what exactly the on-chain use case is for that right now. But I know it's just the capital efficiency improvements of having 24/7 markets, like settlement within like several minutes as opposed to days, is just hugely advantageous for so many reasons. And so it's really like the standard like adoption thing where you need something that's like uh, really way better, like 10 times better, and that is like stable coins, and that's dragging, and then that's pushing up all the other like tokenized RWAs like equities and stuff like that. There's this continuing pressure to drag them on chain more and more because more of the center of the world's finances are moving on chain because of US dollar stablecoins. And again, it's just a matter of when there's going to be like a snowballing inflection point at some point, and probably not too far away, I would say, like on the order of maybe 5 years.
Yeah, I would say like we're definitely like heading towards like that destination. And I feel like one of the biggest catalysts for this like new like acceleration in like in DeFi and RWS is just the regulatory like I guess constraints were lifted by the current administration compared to the old one. Like the current administration in the US seem to want to leverage crypto and DeFi like much more, and like we've seen it like with the Genius Act. We've seen Scott Bessin's comment on essentially wanting to fund the US debt with stable coins. How do you think, like, how much do you think, like, this part of the acceleration, like, plays a role, I guess, in the broader, like, crypto growth?
Yeah, I mean, you said it yourself, and I think the U.S. politicians, regulators are waking up to the fact that there's crypto is actually a solution to the looming U.S. debt crisis, and so stable coins, U.S. dollar stable coins, are increasingly one of the larger buyers of U.S. debt treasuries, and so this is extremely important for the U.S. For their own security. So I think this is why you see politicians coming around to this. And crypto is such an interesting name because it's kind of like, bad for the U.S. dollar on one hand. Bitcoin, I think, was not particularly good for the U.S. dollar, but stable coins, which crypto is enabling, and that is one of the main use cases, is super good for the U.S. So it's kind of like this mixed bag of things. But I think that's like any technology. There's good and bad, and stablecoins increasingly seem to be winning out on sort of the dollarification of the world, and so this, I think, the U.S. is leaning into it for this particular reason. I think they should, for sure, because I do not want to see a world where the U.S. dollar collapses. I think it's with all the problems with fiat currency. I think that is a far worse world where the U.S. is not the global hegemony.
Speaking about, I guess, like, the long-term vision for stablecoins, like, do you see the space, like, expanding into, like, more and more different types of stablecoins, like maybe more like euro stablecoins, maybe like different currency stablecoins? Do you see different, like, risk reward, like, ratios in the yield bearing stablecoins? And maybe, like, do you feel like don't you feel like there will be any, like, consolidation, at least on the base stablecoin, the one that's not yield bearing?
Yeah, I mean, there's kind of what I want and what I think will happen. What I want is more decentralization and the different types of currencies available. And I think actually Bitcoin and ETH provide that sort of hedge on this that's always there. So I would like to see more into like cryptocurrencies that don't have arbitrary minting rules for the fiat currency regimes of today. But even with countries, I do like having checks on the fiat, like on the US dollar as well. It's good to have the euro and maybe even the Chinese yuan as well. So yeah, it's good to have these checks. But what I think is gonna, I do believe that the dollarification of the world is going to just continue to accelerate. It's kind of human nature to pile everything into one asset. Just because individually it actually, I mean, it makes sense because having your existential risk be tied to the entire world's kind of, it just kind of, from an individual perspective, it makes total sense. So this is kind of the nature of human beings, is to pile into one asset. So yeah, I think dollarification is just going to continue to accelerate.
Amazing. Yeah, Sam, we're right on time. Thank you so much for coming on. Maybe before you leave, could you just give some recommendation to the audience as to, like, how they can learn more about Spark, interact with the protocol, and follow you on your socials?
Yeah, so the two socials that are most active is you can follow spark.fi on Twitter, X, and me, I'm Hexanaut on there. I tweet sometimes. But learning about the protocol, yeah, I would say just start using it. You go to spark.fi, you can deposit, $10 or whatever if you want to try it out. We're supported on Ethereum, Base, Arbitrum, Optimism, and Unichain, and we'll be looking to expand to basically all major chains. And so, yeah, I mean, there's documentation as well, but yeah, you can get some of the tokens, start staking. There's lots of different ways you can interact. Oh, so we also have a Discord, Telegram, in English, one in Korean as well. So yeah, or even just like ping me, you can DM me. I usually try to respond to people as much as I can. So yeah, welcome everybody to get involved.
Amazing. Well, thanks for coming on, and to the audience, see you in the next one.
Yeah, thanks for having me.